Okay, folks, welcome to Swing Trading Today. This is Bob Desmond at the Contrarian Trader, and it is May the 30th, 2019. All right, so the month is almost over. What we're going to do today on our member stock chart request segment is that we're going to use our sponsor trendspider to review the symbols that our members submitted for me to review. But before we go to those symbols, what I want to do is answer a question. What does the yield curve imply in this economy, and has the yield curve inverted? Then we're going to talk about the pre-market activity. What are stocks doing? What's the dollar doing? What is gold doing? So let's kick things off with a question that was asked by one of my members, and it is this: has the yield curve inverted? Because I usually use the 2s versus 10s, and that's what we're going to start off with. That's where they're a little bit confused. He was listening to the news. He keeps hearing the yield curve is inverted. And that's a completely different chart than what we're going to review right now. I like to use the 2s versus 10s because it's a higher level critical view of the economy should the yield curve using 2-year Treasury notes versus 10-year Treasury notes, should those two yields invert, you have a huge problem on your hand. And it generally implies, as you're seeing on this chart here, that as in the past, as highlighted here, we are in recession. This is the dot-com era. This is the financial crisis. And we are at the precipice of a breakdown of this bear flag formation on a monthly basis. We have put in a new monthly low on the yield curve, or I should say the spread has widened out. Or I should say, the spread has narrowed on the yield curve, and that we have taken out the lows of last month. In the month of May, we were down below the lower band of support only a couple of days ago. And I'm not going to be the least bit surprised to see a break of this support level and for ultimately the yield curve to invert. Now, where have we seen yield curve inversion? Well, we've seen yield curve inversion is on the shorter duration notes. Now, what the 3-month yield curve is baselined against is the 10-year Treasury note. And as you can see here, we have clearly inverted on this yield curve. And as I had highlighted earlier on the 2s versus 10s, the last time we had inverted was back here in 2006, 2007, and prior to that, the dot-com bubble. And you can see we didn't stay inverted all that long, just several months. And then the Federal Reserve came stepping in, cutting interest rates aggressively, wiping out the yield curve inversion. So that's what the markets are looking for right now. When they're looking at this chart of the 3-month Treasury note versus the 10-year, what they're saying is that, yes, it's inverted. And when you see headlines stating that the Federal Reserve is anticipated to cut rates, they're basing their thoughts on this chart here. I like to use the 2s versus 10s because it's a higher level view. But this is very good as well, as it certainly puts aside the promise that this economy is the healthiest economy ever. So to summarize, and to answer the question clearly, the 3-month Treasury versus the 10-year Treasury has in fact, yes, inverted. However, the 2s versus 10s, they have not inverted as of yet, but they are threatening to break down to new yearly lows. Let's move on to the pre-market activity. Okay, for the pre-market activity, we're going to begin with the stock market futures, the S&P 500 using 4-hour charts. And the S&P futures are up this morning, shy of a half percentage point, up 11.25%. We were in a downtrend channel. We have broken out of that downtrend channel on a 4-hour basis. So we're setting up for a rally here on the S&P 500. Where would the next stop be on a healthy rally on the S&P 500? Right up here to 2,829. We may stop shy of that at resistance here at 2822, where we will see resistance. So those two price targets are what I have in the short term for the S&P 500. Now, if we fail to take out the morning's highs and we roll back down and into this downtrend channel, look out below because that will be a major league breakout point failure. We'll turn this red. You don't want to see the S&P 500 trade back down below 2780 anytime soon. The NASDAQ 100, they too broke out of this downtrend channel. Short-term price target, 72.71 on the NASDAQ. And at current, we're up 28 points on the NASDAQ 100 futures, up over a third of a percentage point. Let's talk about the US dollar, and then we'll segue over and into commodities. The dollar on a 4-hour basis, we peaked out right here in 2019 on the 23rd of May. Flashed a bearish key reversal. We have just turned positive on the dollar this morning. We did see some pressure earlier. We are seeing some tweezer action, some topping tails on these candlesticks of late. So the question is, do we take out last week's highs, or do we fail and put in a lower high on the US dollar? If we get that lower high and we break down, we may just see a rally in gold and silver and the other related names. Now, why am I saying may when traditionally that's what would happen should you see a breakdown in the US dollar? Well, we saw a breakdown in the US dollar last week, and the gold miners in particular underperformed. They did not respond well. Gold did close up, but really hardly a bid. Not very exciting. Perhaps traders are waiting to see a confirmation breakdown on the US dollar, meaning a double top and a break to new lower lows. I could buy that. Now, and speaking of gold, gold is down this morning, nearly a half percentage point. We're currently trading at $12.80 the ounce. We have broken back down on RSI. We were putting in higher lows and higher highs. That is stopped. Now we're putting in lower highs and lower lows versus the lows seen on the 27th. So I would not be a buyer of gold on this pullback. Perhaps on a pullback of support down here at the 1277 level. Taking a look at silver. Silver is looking a little bit better. We remain in a downtrend channel. However, we are putting in higher lows, and now what we're looking for are higher highs and a breakout and above the 1447 level and a close there. We have broken out above this upper band of resistance several times before, only to fail. So it's at this point where we need to say, okay, we need to see a breakout, not only above the upper band of resistance, but ultimately a breakout to new prior highs on price. Because there have been far too many head fakes on silver this past month or so. We have broken out on RSI this morning. So silver looking interesting as we proceed into the new trading day. Let's leave this segment off with Bitcoin, and then we'll go over and into members' stock chart request, which is where I review the symbols our members submit for me to review on video. Now, Bitcoin has turned positive. We were down earlier. I put a price target, I believe it was last Friday, of 9,500 on Bitcoin. We hit a high of 9,000 over the weekend. I think that we're pressing higher. Should we break out and above this upper band of resistance at 8740? And if we clear the prior high at 9,035 on Bitcoin, we'll be at 9,500 in a heartbeat. So Bitcoin consolidating, looking bullish. Now let's segue over and into members' stock chart requests. This is where we review the symbols that our members submit for me to review on video. This segment is sponsored by our sponsor, TrendSpider. TrendSpider is the next level in charting software. You've all heard of artificial intelligence, automated technical analysis. These guys are at the forefront. And any product should be able to solve a problem. And the problems that TrendSpider solves for me are many-fold, but the top two are: one, time. The efficiency of using automated technical analysis is outstanding. I can use on one single chart. Let's go to a daily chart of our first chart up here, ABB. And with one single chart, these are heat maps showing resistance levels on a daily basis, showing trend lines of support and resistance on a daily basis. However, what I'm able to do is take that heat map off, clean it up a bit, and perhaps I want to overlay, we'll take the daily trend lines off as well. Suppose on this daily chart, I want to see where I may have weekly resistance. I click a button and it overlays in seconds weekly support and resistance levels onto a daily chart. And I guess this is a good spot to begin with as we talk about ABB, which is our first stock up. But before we talk about this stock, there's a coupon code CT25Z. It should appear in front of your screen. If you watch this on YouTube, link over to TrendSpider, get your discount after, of course, receiving your 7-day free trial. And if you're watching this on the blog, look up and you'll see a link over to TrendSpider. And of course, TrendSpider is included with our silver and gold level memberships. That is a part of your membership. Back to ABB, daily chart. So you could see yesterday on a weekly basis, obviously the week is not over, ABB broke down below key support on a weekly basis. So tomorrow, as we near the close, I'll be looking at this chart, looking to see as to whether or not we have closed down, or we appear poised to close down below this lower band of support. In all probability, we will. Stokes is still rolling over. Let's go to a monthly chart to get that higher level view, given the fact that the month is nearly over. And on a monthly basis, I want to use monthly trend lines. And you could see that we are right at two prior support levels, actually three, one in green, one in purple, one in red. And if we break this support level here, in all probability, we are going to come down here to around $10 per share on ABB, which is a significant drop. So watch for a break on a monthly basis below, I'd say 18.05 for a clear break below monthly support. Moving on to our next stock, which is Loop. All right, not much data here on this chart, in that it appears to have only gone public back in 2006, 2007. Now, it's clear when you look at this upper band of resistance in green and this lower band of support in purple, we are in a clear and defined triangle formation. Now, I think that we could spend a lot more time within this trading range. If you're very bullish on the company and you wanted to buy at a good support level, I think the fact that we bounced off the lower band of support here this month is fairly good. You could use a stop right below the month's lows and get stopped out. You could do that as part one of a strategy. Part two would be to buy on a breakout above this upper band of resistance in green. And what you could do is set an alert. This is what else I like about TrendSpider. And if we break through this resistance level, I can create an alert. There it is. I will get an SMS text message and or an email, your choice, when we do break out. Now, suppose we fail to hold this support level. Well, we create an alert, and there you have it. You set it and forget it. This is the value of TrendSpider. So Loop is in a trading range. We're bouncing off the lower band of support on a monthly basis. Good stuff. We are now well off the lows of the month. And now what we want to see is a trading range begin to develop to within this apex and then a breakout above it. So Loop, while we're still in a downtrend channel, appears to be improving a little bit. The next chart up is the DBA. This is the agriculture ETF. We'll widen this out a little bit here. All right, so again, monthly chart with monthly support and resistance levels. The month is nearly over. That's why I'm interested in the monthly chart. So you can see that we are well off the lows of the month, but we are at resistance, as noted by these topping tails. So we have stiff resistance above. Now, let's pull back to a weekly chart. Yeah, we're right up and into resistance on the 20-period moving average, which is declining. Beyond that, we have resistance at current 1678 level. So we're not that far away from it. Would I be a buyer here? No, not yet. I would like to see a rally up and through this prior price high of 1690 on the DBA. That would put us on a closing basis above this upper band of resistance in blue. It would also put us at a new higher high on price. And that's what we're looking for. The farmers are having a hard time with their crops in the United States due to the flooding. And that is offsetting the weakness in demand from China. And that could be a real serious catalyst for the DBA moving forward. But we do need to see further price appreciation. Another way to play the DBA is on a pullback to this lower band of support here at 1590, and that would be a potential higher low. Moving on to ADM, another ag play. All right, so this is a monthly chart, and ADM is not benefiting from the farmers' concerns regarding the flooding. You can see that we are putting in lower highs, and that we have at current on a monthly basis broken down below critical support. Now, if we fail to rally back and close above this upper band of resistance, the next support level is going to be right around here at $35.50 per share. So all I'll do is create an alert. Should we touch it, I want to get notified. And there you go. If I want to get notified, if we recapture this support level, then I have my alert set and we're good to go. Okay, so I have one alert set. Should we recapture support? I have another alert set. Should we tap the lower band of support? And that is it for this morning, folks. Everybody have a profitable trading day. Make sure to follow me on YouTube. Enter your email address on the website. We hate spam too, and we'll send you out some free trade tutorials and our free commentary. Have a great day.